Hello. Overall, oil is down this week as global demand falls. Both gas and power curve contracts closed lower, directed by a weaker, wider fuels complex. Let's take a look at the week's actions in some more detail. Oil prices softened on Monday on forecasts of falling global demand. The front-month contract lost nearly $2 per barrel day on day. Brent continued to slide on Tuesday, despite reports that OPEC members and Russia would continue to cut supply in response to an economic slowdown. Prices then rebounded somewhat on Wednesday after the EIA report showed a decrease in stocks of 1.1 million barrels compared to the previous week. Despite the weekly drop, inventories are still around 5% above the 5-year average for this time of year. The upward direction continued into Thursday's session, and despite the gains seen on Wednesday and Thursday, last night front-month Brent closed at $63.45 per barrel, and that's down $3.26 per barrel compared to last Friday.
Fundamentals were bullish on Monday. LNG flows were forecast to be reduced, as were imports from Norway. An outage at the Nyhammer plant was extended by 2 days, and demand increased as a drop in wind generation increased the reliance on CCGT. These bullish signals all drove prompt prices higher, although near-term and longer-dated contracts all softened, taking direction from weaker coal. The system was short once again on Tuesday, and most contracts rose in the morning. However, losses in oil directed all contracts lower in the afternoon to close down day on day. A number of Norwegian outages left the system heavily undersupplied on Wednesday. By the afternoon, issues at 2 platforms had been resolved, which pushed the system into oversupply. Prompt and near-term contracts closed the day higher, whilst curve contracts fell in the afternoon to settle lower day on day. All contracts posted gains on Thursday. System fundamentals were tight. Oil and coal also rose, although weaker carbon capped for gains. Last night, compared to last Friday, near-term contracts closed higher thanks to the tight system dynamics, whilst curve contracts closed lower.
Curve contracts rose on Monday, directed by higher carbon. Soaring temperatures across Europe meant an increase in demand for EUAs, as market participants anticipated increased air conditioning demand. Both Brent and carbon fell on Tuesday, which dragged power prices lower. Winter 19 lost £0.8 per megawatt hour day on day. Prices continued to soften on Wednesday before changing direction on Thursday. And last night, despite the gains seen on Thursday, all curve contracts closed lower than last Friday. You can download the full version of this report from our website. Thank you for watching, and we'll see you next week.